Now we'll get back.
Originally, I was going to come in like Steve Ballmer and start jumping up and down. I know it's fast not to do that. My name is Varun Ram, and I'm also covering the tech and telecom sector. And since we're on a time limit and people are going to throw things at me, let's just get to it. I'm going to pitch to buy Verizon. They're a telecommunications company. They're strong. They're growing at a fast and cheap. They're growing fast and cheaply. The management is beautiful, and I'm a customer. And I love them. So what they do. Verizon does, they're in the wireless and wireline communication businesses. Most people know them for their mobile services for cell phones, laptops and tablets. Between the wireline products, they have Fios, which is a cable and internet access. They're also going into cloud computing. Between the breakdown, they do 68% wireless, and the rest is between the wireline products. With their management, they recently bought out Vodafone 45% stake in Verizon Wireless. So everything's all under one roof now. Going back to their cell phone coverage, they have covered most of the 3G network with LTE services, and now they're trying to build upon that with LTE-A, which is the most advanced service. Now, what's good about that is that they're not replacing anything else. They're adding on to their existing framework, so CapEx is going to go down. Now going back to the wireline products, Fios, which is fiber optics, is now replacing the standard copper wire DSL technology, which means that there's no shared data. So if you pay for 50 megabytes per month, you're going to get 50 megabytes per month. They also do the start to finish model where it's like just go straight from, it originates from the Verizon company straight to your home if you do Fios. Now their new business ventures is in cloud computing. They recently bought a small company to try to boost their Verizon enterprise services, which is a business avenue, and as we see later on in this presentation, the true value of cloud computing. And lastly is this part, the Canadian acquisitions. They kind of want to do some market research on the current oligopoly out there. They acquired a small firm for about, I think, $700 million just to see how the spectrum works. Most companies up there already have shared data plans and cable and cell phone networks, but Verizon wants to see if they can transfer their core competencies and what their success here, see if they can work out in Canada. Moving on to the actual financials, we can see that Verizon has been squeezing out more money per customer and at the same time keeping people happy. So this gap has actually been increasing over the years. They're now beating the industry on average revenue per user by about 8%, and at the same time they're keeping people happy. Verizon already has a notoriously low churn rate, if they're going even lower. So they're actually charging a premium for their prices, and people like that, and they want to stay with Verizon. And going back to, again, the LTE framework, they began an aggressive expansion of that network in 2012. And as you can see, the market share has grown by about 150 basis points, as opposed to the complete industry only going by about 100 basis points. Moving on to the financials, we can see that they're going against the Ramsey benchmark, the S&P 500. This growth estimate is taking into account their management, future forecasts, their potential, what they've done now, and what they're going to do in the future. Looking at a really cool and awesome EPS, PE and DCF valuations, the highlights show that on the conservative end, we're still creating a discount. And I believe that even on these conservative levels, that there's still room for growth. And buying it now shows us that we have that moat or margin of safety and then some. Going on to the balance sheet, there are pros and cons. The pro is that they're strong. Their gross profit and EBIT margins are going up. They have a pretty good price to book. But the beauty of this, you can see in the bottom left, is that they're beating their competition. They'll be AT&T and Sprint. They're growing faster and their margins are better. But I'm not going to be up here just selling you just all the nice stuff, right? Verizon is in debt, just like me with student loans. They're levered. The Vodafone buyout was expensive. I feel it was worth it, but it's very expensive. Their debt profile is really bad, hence why it's in red. But then they have this burden hanging over their heads of all these debt obligations and all the financing to purchase that buyout. I feel that these factors will be mitigated by Verizon's future growth and their earning potential. And this sucks, but then it's going to help them out in the long run, and they're able to get over this hurdle. Now to switch sides, we're going to do the unthinkable. I'm going to sell Apple. Pitchforks down, please. I have an iPhone too, so I'm a big hypocrite. But things have changed. Steve Jobs is gone. They're not changing their model, and as we see later on, people are moving from product-centric to cloud computing or the internet. Leadership, Tim Cook is a genius. I like him. He's a supply chain operations master. They're going to save money on supply chain costs and management, but he's not like a used car salesman like Steve Jobs was. If you go to the keynote speeches of Jobs that compared to Cook, that flair isn't there, you know. And she's just not grasping people into like why Apple is amazing, why I should pay like your firstborn child for a laptop. And as you can see, like the stock price, like a year after Steve Jobs' death, it did spike up, but then it hasn't gone back to those levels. Like Cook can't emulate those levels again. And the problem is that Apple is still selling iterative products, which we'll visit later in this presentation, and Cook hasn't really changed that concept. The other threat is the rise of Android. Android just a disguise for Skynet from Terminator 2. Android was originally like a worthy competitor, now they're just obliterating Apple. Worldwide sales, they're just destroying the operating system. I gave BlackBerry a slice because I felt bad for them. But Android is amazing. Google knows the value of the internet, and the nice thing about the Android is that it's not limited to just one type of cell phone manufacturer or handset device. It's the software, and people can customize it. It takes advantage of Apple, how Apple is so rigid with their products, and most Android devices are cheaper. And this graph just shows you like one of Android's best friends, Samsung. They're also beating Apple in the world. But lastly, which is really important for Apple, or for myself, thesis is cloud computing. Cloud computing is it's increasing exponentially. People are actually virtualizing their entire servers, and it's not product centric. It really goes against everything that Apple has believed in for the past years. Even when Steve Jobs was in his plane of existence, people told him that you can't keep selling phones and tablets with new bells and whistles. You have to understand the value of the internet. Like, so what's going to happen, I feel, is that people will just have a phone. It could be like, really simple, but if it has one app just to go to the internet where everything is, that's all you need. You don't need like a slow motion camera on your phone. You don't need like all these other devices and apps. You just need one way to get to the internet. And Apple still hasn't realized that, and it's going to really hurt them because people who want to be truly mobile, they don't even want a jump drive. They just want everything on the internet, just an internet connection. That's all they need. Just to summarize, using the Ramsey framework, I'm going to give Verizon an A-. The balance sheet isn't exactly pristine because of a huge debt burden, but everything else I feel will make up for that con. Their margin of safety is highest because I believe that at the beginning of the value chain for handset devices, they're innovative, they expand and grow cheaply. So, for example, when they install the LTE devices or the LTE towers, those data towers cost about 1/6 the price of the 3G tower. They save money. They're in terms of spectrum, they own most of the spectrum, and they have so much freedom that they sold AT&T some of their spectrum for I think about $1 billion earlier this year. And they're able to use a lower frequency spectrum much more efficiently than the competition. For Apple, I'm going to give them a B because, they're in the market leader. They make so much money. I think the interest coverage is like 360, which is absurd. But the problem is they haven't really changed their business ideas. It's just the same thing. Selling the same device that came out in 2007 with new enhancements to it, not really realizing the threat of Google, which I feel in about 20 years will just take over the planet. But they also don't realize the shift to the cloud. Cloud computing is going to obliterate Apple and their philosophies. So, I have an iPhone, I like it, but then in the coming years, I don't think there's going to be a feasible structure.
That's Steve Jobs calling.
Thank you for your time. So please give me easy questions that require long responses.
Question.
Sean.
Does Verizon still own most of their base stations, those towers? Because I understand the strategy Verizon firms to sell those off to companies like American Tower Corporation.
They own most of them, hence we're able to sell them off because they have the flexibility.
Also, so they're in the process of selling them off?
Yeah, so they have excess spectrum actually. So like excess spectrum is not really doing anything for them, so they sell it off, but they leave you, hold it there.
I saw, I just looked at the stock on Yahoo. I see a big spike up, like a, not a spike, but a big, big growth in the early year, and then it dropped again in like October. Do you know why it grew so aggressively until April, and why it started dropping off until October?
Probably because
Is this Apple or Verizon?
Sorry, this is right.
the ongoing, so that Vodafone buyout had been ongoing for about 14 years. There's a lot of back and forth between Vodafone's management and then the current Verizon board and their predecessors. So every time a new piece of news that was released, saying Vodafone deal might not work out because Verizon was betting a lot, the market reacted to it. So that just that back and forth, that tiff, finally came to the eventual buyout. Yeah. Yes, ma'am.
So what's your opinion about the cable business? Because I feel like the American school and the industry just gaining market share in this business and it's very cheap. So what's the revenue?
So Verizon, so for the broadband market, Comcast is a leader. Verizon has about 7%. But so it's not really like their primary line of business. They just have it just to expand their portfolio. And they do it pretty well. But the thing is that attached to it is also their internet service. So the cable service, or sorry, the file service. So if Netflix and all these companies take off, Verizon still wins because you still need internet access to run those programs. Yes.
So what are your thoughts on China mobile deal? Because it has about 600 million users, so it's 6 times the size of AT&T.
Mhm.
So what are your thoughts on the prospect of that deal and whether it's priced into Apple shares?
The China mobile deal, I feel that, I'm trying to think. So I know that Cook was talking to them about selling some handsets there. But in terms of like the long term, yeah, I think he said they would move up to 10 to 15 million units. But like my thesis with Apple, it's like not maybe in like the next 3 years, maybe in the next 5 years. So all these really will like go against my thesis for Apple. But I feel in the longer run, people are going to see that it's just the same device. And I understand in Eastern Asia that those devices, like they had a video conferencing thing like 7 years ago. So it's a cool product and whatnot, but then at the very end they're going to feel that they're superior products to Apple. That's really not what the premium price that they're charging people. Yes, sir.
What are your thoughts on the cloud computing advantage for various business?
Sorry, say that again?
You said that this is the biggest winner between the war of cell phone manufacturers and cloud computing. So what do you see the advantage for Verizon in cloud computing?
So cloud computing basically is that, let's say that on your mobile device, everything's on the cloud, right? No matter, so you require more bandwidth. Let's say in 7 years you have Verizon 6G, because you need 6G to make up, just to access the cloud. Because since everything is on the cloud, you need like a proper service that has a proper bandwidth to handle whatever you're going to upload and download. Since everything's going to be on the internet, you need a service to get to the internet, and Verizon will be that person. Yes, sir.
So now that you mentioned that point, have you looked into the CapEx that Verizon has to make in the future? I mean, I have a data plan of 3 gig. If you're talking about everything going to cloud computing,
Yeah.
which means that you either have to build more towers or expand on bandwidth, which means more CapEx for Verizon.
Mhm.
So,
Right, well, CapEx right now, since for the next generation of cell phone service, which is the LTE-A, they're able to just use their existing LTE frameworks and add to that. So as of now, CapEx is going to like drop sharply because they're going to have to build new towers. They're just going to keep adding to their existing towers. And at the same time, since they have excess spectrum, they have the flexibility to adapt if there's like a sudden change. So for example, Verizon operates all their businesses on a 750 megahertz spectrum, but they have excess stuff in 900 and 950 megahertz, just in case that happens. Yes.
I think that Apple has a great history of innovation.
Yeah.
They really created the smartphone market, the iPhone. They resuscitated the tablet market, the iPad. Why can't they do anything with smartwatches?
The smartwatch, Apple did look into that, but there won't be like a game-changing product. It just as a response to Samsung. It's not going to be another like new product they're going to add. It's going to be viewed as essentially an accessory to an iPhone.
So when you look at Apple versus Verizon, the margins, the return on assets, all those things are in Apple's favor.
That's right.
Correct?
Yeah.
Talk about the valuation.
Yeah.
Compare and contrast how you think about that.
How Apple is valued. I'll stand and show that Apple is valued very well because they're very nice to their investors. But then I'm looking more like, and so is Verizon. I feel like they're trading at a discount. But then
So PE on Verizon's, call it 19.
yeah,
PE on Apple is
it's like
14, not including the cash. So if you back out the cash, it's
12 or something.
12, 11.
yeah.
So, and then any growth prospects you have built into yours, 4% growth on Verizon. I don't know what you have for Apple. More than that. So try to square those for us.
If you compare and contrast their valuations, I would say that Apple wins. But then if you're looking at long term, because Apple is doing really well, I'm just more looking at, say, like 5 to 7 years. And I feel just because the way things are moving, mobility, again, cloud computing, like these service providers went out more than the people who only focus on products. So Apple will still be like the person, people still buy their stupid white box and whatnot, but then at the end of the day, on that value chain, like you have an iPhone or something, cool, but who's going to give you that service? Verizon is. And I feel that because of that, on that value chain, like Verizon is much more important than Apple. Yes.
Yeah, based on the percentage of sales are very, very because Apple's percentage is 11% upside.
Mm.
So even your like the revenue based on again still looking at expanding a little bit. Here the 4% growth rate for Verizon. Even Apple had previously 46%, 44%. But even going forward, you are putting 9 to 7%, so it's very conservative. Even these ratios, still Apple is more valuable and generating more revenue and more upside.
Yes. When I said I was going to sell Apple, everyone laughed at me. It is an uphill battle, but I know everything else points in Apple's favor to let it stay in the fund and keep Verizon out for a little bit. But I'm more looking at a longer timeline. Because again, it's just that I'm not really sold on what Apple has done in the past, let's say 7 years, because I feel that maybe they've reached a pinnacle. Maybe because the iPhone and the iPad, like that, those are the landmark products. What else can they make? But then Verizon, I feel like there is no limit because people still require more bandwidth, which puts pressure on the service providers to come up with something that can handle like more video messaging, more picture messaging, increased bandwidth, and just have more spectrum to handle that data. Yes?
What is the future of, again, for Apple TVs? Are anything that they do that still?
Apple TV, again, going back to the value chain, Apple TV probably has to, it requires an internet connection. So I guess Verizon there would be there to provide that connection. But Apple TV, again, I feel it's more like the smartwatch. It's just part of their portfolio. It consolidates everything, but then it's actually run by their landmark products through the iPhone or the iPad. Because most people, they link the iPhone or iPad to the Apple TV.
All right, I'll ask the last question. Maybe to try to consolidate the thesis for us. So, agreeably, the metrics stack up better for Apple at the moment.
Yeah.
Why sell that and buy Verizon at a higher valuation? What is the one takeaway that we need to understand?
I had a really bad analogy. The analogy was that we're both like, picture a solar system, and they're both stars, right? Apple is like a bigger star. It shines brighter right now, but then it's on its way out. It's going to start, it's really bright now, people like it a lot, but it's going to start waning, it's going to start dimming. Verizon is a younger star, it's bright right now, it's gonna get brighter. It's gonna keep growing while Apple's gonna start to wane. And I feel that it's gonna be like the changing of the guard, where you require someone that has no ceiling, while Apple has a lot of like the lack of leadership, loss of leadership, excuse me, and products that haven't really done anything super fancy since 2007, whenever the iPad came out. Actually, I feel like that star is kind of like setting down while the new Verizon star's going to come up in replace Apple.
Thank you, Varun.
Oh, thank you.
Was there another question?
Yeah, it was.
All right, well, Get him up.
Here's your Steve Ballmer.
Yeah, now you have to jump up and down. Make sure that's on. The green light should be lit if it's on.
Here you go.
Is that on? It looks off.
That is off.
Look, it was not off for the...
I think it was.
What?
We should just keep it on.
Yeah. When you're ready.
So I've been done in tech and telecom sector for the past few months. Today I'm going to suggest that we get rid of Microsoft from our portfolio and replace that with Quantum. In terms of the roadmap for the presentation, I've been following the investment framework that learned in this class and evaluating both Quantum and Microsoft on this framework. Let's start with Quantum. Quantum's main line of business is glass. Even though it operates in 5 different segments, it primarily provides glass and glass-related services to all the different segments of it. Display technologies is its primary source of revenue. It's 36% of its revenue. Close to 50% of the revenue in this segment comes from Samsung Corning Precision, which is a joint venture between Samsung and Corning. And this unit generates close to 50% of the display market sales worldwide. And Corning recently bought out the entire division. So Corning owns Samsung Corning Precision unit right now. That's a huge growth of revenue for them in the future. And the next biggest sector is the telecommunication sector. The third and most important sector from here on is specialty materials. This is where a lot of growth is. Even though it's just valued at 17% now, it's expected to grow up to 45% in the next 3 to 4 years. If you look at the growth rates, it's been growing at specialty materials. Sectorially has been growing at a very impressive rate of close to 60% for the past few years, and this growth is expected to continue in the future. Its most selling product is Gorilla Glass, which can be found on close to 1.5 billion devices worldwide right now. And this is the main reason why it's doing so well, and there are many other aspects which I'm going to talk about in a bit. Management. And before I start talking about the management, there are few collections in the slide over here. The ROA and ROE are 13.4% and 18.9%, not 3.4 and 8.9. So Corning's management basically has two agendas. One is great profitability, and they believe that innovation is a great way to do that. That's the main reason why they spend 13% of their gross margin and 43% of their net income in R&D. And the second biggest thing is they return a lot of value to return a lot of money to their shareholders and buy back most of their stock if they feel it's undervalued. That's the main reason why it has announced a $2 billion share repurchase, which is equal to 10% of their market value right now, and it has good dividend yield of 2.8%. Looking at the balance sheet, Corning has cash and cash equivalents of close to $6 billion right now. It's double the value of its debt, so debt is not a problem. And another thing is, if you look at the book value, it's $15 per share. But since Corning operates in the tech firm, looking at the tangible book value would make more sense. It has a tangible book value of $19 per share, and it's currently trading at $16.2 per share. You can see the stock is clearly undervalued right now, and it has good credit ratings. It has good operating margins. Margins are down this year, but if you look at the operating margins for the past 3-4 years, it's close to 38% profit margins, operating margins. Growth estimates, these are based off from Yahoo estimates. These are very aggressive, and even over here, it's performing really well. Not just in the next year, but even in the future. More. The best way to talk about Corning's mode is to, if you look at the technology revolution that's going on right now with smartphones, tablets, and wearable technology, betting on Corning is the best way to go forward. Because no matter what firm it is, let that be Apple's iPhone or Samsung or even HTC or Dell, in order for them to get into the market or tap into the market, Corning is the way for them. All the products right now, all the smartphones or tablets, they use Corning's products right now. Their new innovation, Willow Glass, which is a bendable glass, is being thought as the next big thing for smartwatches and Google Glasses and stuff like that. Their other big innovation right now is Gorilla Glass 4, which kills off 99% of the bacteria it comes in contact with. These are two of their new products, and they are very big on these. It recently made a $2 billion deal with Samsung, and this is expected to increase its global sales by 25% in 2014 itself, and they're entering into newer segments and newer areas, such as providing windshields and sunroofs for high-end cars. Pricing and valuation. Corning operates in a lot of different segments, so I had to look at all the different segments and then come up with a growth percent. Specialty materials is just I used a very conservative approach and came up with a value of 15%, but it's expected to grow even more in the future. And again, another small correction over here is the country book value. It's not 15.2, it's 19%, as I $19 per share, as I mentioned earlier. And the PEG value is 0.96. Both these two clearly suggest that the stock is undervalued right now. Buying now would be a great time. So when I was calculating the fair value or the intrinsic value of the share, I came up with a growth rate of 13%, but still I went with a very conservative value and just used 10%. Even using the growth rate of 10%, I had a fair value of $20.64. This gives us an upside or margin of safety of close to 23-24%. Corning is a great firm with great valuations and strong and exceptional mood, so buying it now would be a great bet. Myself and Microsoft, I'm sure everyone in this room knows about Microsoft, so talking about its business is pointless. So let me just get straight into the details as to why we should sell this firm right now. Microsoft had an exceptional growth phase from the 1990s to 2005. And from 2005 to 2010, its market share kind of stabilized and then saturated. Especially in the past few years, it's been on a downhill path. You can look at the ROE, net profit margins, and sales margin over here. You can clearly see that they have been declining and they're expected to go down. And the main reason for that is its management. In the past 20 years, the real innovation or the most innovative product at Microsoft was Windows and Office. Apart from that, all the other major product launches were big failures. Steve Ballmer has been the CEO for close to 12 years now. He's stepping down. All the products that were launched under his leadership were big failures. The main reason for that is the management at Microsoft is not that big an innovation. Innovation is the main reason why firms in the tech or the software industry thrive. That's the main reason why the value of Google stock is so high, because they innovate constantly. Microsoft has been lagging in this field, and that's the main reason. Balance sheet. An important thing to look over here is the tangible book value. It has a tangible book value of $7.7 per share, but it's currently trading at $39. It's clearly overpriced. Another thing is, when I was calculating the fair value, I went with a growth rate of 7%, but a growth rate of 7% for a firm like Microsoft is very high. So even using a growth rate of 7%, I only came up with a fair value of $39 per share, and it's currently trading at $38.5 per share. So it's close to its fair value. Selling it now would be a much better move and a good decision. Even growth estimates using the high growth estimates given by Yahoo, it's not going back well in the future. And again, to reiterate or talk about the main selling points, there isn't much growth in the PC industry right now. It's expected to go down. If you look at any of the points over here, you clearly see that. And another important reason is the stock price of Microsoft. For the past 10 years, its high has been only $38.98, and it's currently trading at $38.5. So selling it now would be a good bet because it's at its highest valuation in the past 10 years. Getting rid of this from the stock now would be a great move. And replacing that with Conning would be an even better one. That's it. Thank you. Thank you so much.
Question.
Sure.
Yeah. Is Gorilla Glass a display or is it literally glass?
It's glass with, it's high in technology. It's basically glass combined with a bit of display. It's like what they do is they just manufacture the glass for a smartphone or a tablet and then give it off to the manufacturers.
Okay, so like this screen.
It's
of
just
my
the screen.
iPhone,
Yes.
Is Gorilla Glass?
That's Gorilla Glass.
And then underneath it is the actual pixel display?
Yes.
Alright. How much of their business is actually driven by Gorilla Glass? I know it's something that a lot of people are getting into.
It's 15%, and they spend a lot of money researching on this product, and that's the main reason why their revenues have been low. It's 15% and it's expected to grow a lot in the future. Recently, BMW i8 is using their Gorilla Glass for their windshields and sunroofs. So this is a lot of glass. It's increasing their revenues a lot. They will talk with Audi too. It's going to increase their revenue sources revenue share from 17 to 45% at least in the future.
So it's beyond this phone.
Sorry?
It's beyond this phone.
Yes.
They have more uses.
Are they looking to tap other markets besides automobiles with Gorilla Glass?
Yes.
Any examples?
They're looking into the TV market right now. They're in talks with Sony to use Gorilla Glass as the display for their LED or the new 4K TVs they're coming out with.
Since you were talking about innovation, I feel like one thing is like Gorilla Glass. Because Microsoft like several things, but isn't innovation at least trying it out? You know, if one hits like Xbox, boom, it's profitable. If it doesn't, just let it go and kind of move on. Isn't that what Google is doing something? Or
Yes, but their innovation, Gorilla Glass is just one of their products. Their new product is Willow Glass, which is a bendable display. They only operate in the glass sector, so all their products are related to glass. So what they do is come out with new iterations for Gorilla Glass 1, 2, 3, and 4. The latest version is Gorilla Glass 4, where it kills out bacteria. It could be used as the display for a smartphone, so it kills out 99% of the bacteria that comes in contact with it. And it's in talks with Samsung right now to use this as their display for Galaxy 5 or something. So they just keep innovating in glass. It looks like just one glass, but they're diversifying that into different fields.
On that sort of note, with regard to Microsoft and those products as being failures, I saw recently that the new Surface is apparently quite good, and Bing has come along. Sort of, what's the update on those products? Initially, they were deemed failures. Is there any comeback for any of those products, and what's the impact on the business?
They recently had written off $750 million worth of Surface tablets as a loss because they were unable to sell them.
Right,
Surface
the previous
1,
model.
Yeah. Surface 2 is out. It's doing okay, but you have many more better models in the market right now. That's the main problem. So if you look at an Android tablet, you can get it for a much cheaper price and with better features. That's their main problem right now.
And then Bing?
Bing is doing okay, but
What's Bing?
What?
it's If I remember correctly, it's actually losing money in its online services division. It grew at a -3% this year. So there isn't much growth happening over there. They're constantly trying to remodel it or change it some way, but there's very little success for them in that field.
Do you think Xbox is a big part of Microsoft or is it more like
It only contributes 5% of its total revenue.
do you think a new CEO for Microsoft could have any impact?
So he might have an effect, but Microsoft is such a big firm with a market cap of $275 billion. Getting a good CEO, streamlining everything in place would take up a lot of time, and that would again require a lot of investment in R&D. You can only see results 4 to 5 years down the line if they do get a good CEO.
The rail glass, is that applicable to automobiles?
Yes, it's being used in BMW i8, etc.
It's step further. You hear about images being projected on a glass, so when you're driving,
Yes.
you can see the speed without looking down.
Yes.
Is that applicable to that?
Yes. So not just that, you look at these smartphones on YouTube and all that are very thin, supposed to be the future. All those models are based on the display being done by Corning.
So what's the position on this issue of
Yes, it's a market leader in 4 of the 5 segments it operates in. It has 50% market share in display segments. There's no competition for it in specialty materials because no one else can make that Gorilla Glass. It's patent protected. It's their only thing. And in terms of telecommunication, when Verizon was expanding their 4G network, it partnered up with Corning. So it has a lot of good value in the market. And to be honest, in the telecommunication sector, it has close to 36% of market share. And most of its competition is based outside of US. And Corning has its units, most of its manufacturing units outside of US, in Korea.
One more question. I feel Microsoft, like for example Office, are highly profitable sectors, right? The decrease of that is kind of sticky, and it's not going to go away anytime soon. Even if it decreases very slowly, it's a sticky kind of decrease. But its increase could be robust. One big thing hits, it could boom, it could just set them off the roof again. However, I don't feel it's got the same for Corning. I feel the decrease is sticky, just like Microsoft, but the increase is also sticky. I feel like even with the new, like bacteria killing,
That's right.
it's slow growth. So
The most important thing for Microsoft, its stock is at its peak right now. You cannot go more than $39 per share. So even if it's going to grow at a value of, let's say, 5% in the future, that's kind of very tough for Microsoft to go. It's tough to exceed that value. You have to look at the market cap. It's a lot right now. It's the 3rd biggest market cap in America.
So I feel like they can do a lot more than what they're doing. Like Google makes glass, Microsoft could make something similar. It's not a big profit, but it could do something.
They recently started to venture into cloud computing, but it's not an area where they're going to get 65% profit margin and all that. It's going down. Their profit margins in cloud computing are nothing more than 20%. So the areas they're entering into are of less profit. I mean, they have a lot of less profit margin compared to the other fields.
Can you talk about the valuation between the companies? It looks like they're both about the same PE. How do you think about that?
Yeah, and I'll add on to that. So the metrics look similar, but the business metrics, the profitability, return on equity, all look better for Microsoft.
I think the tangible book value is $7.7. That's actually a lot. It's overvalued right now. I know. And when I was looking at a firm, researching on what firm to invest in. Corning had a share price that was relatively undervalued in the market right now. That was the main thing. And even in terms of growth potential, Microsoft has very limited ROE, net profit, sales margin, everything is decreasing right now. It was in the high 50s during 2002 and all that. It went up 40. Now it's somewhere at 27, 25%. It's expected to go even down in the future. Whereas for Corning, their main product is glass, Gorilla Glass. They have a profit margin of 25% for that right now, and their net
Is that going up or down?
it's going up because no one else can make that product in the market. So they're using that as an advantage and taking the price up with them.
So they have some pricing power.
It's the only firm in the market. That's
When Corning contracts with a company that's like, for example, Apple, to put the glass on their phone or tablet, are they contracting per phone? So they're saying like we're going to do a contract for iPhone 5, or are they saying making a contract with Apple and say we're going to give you all the glass for all of your products for like.
It's mostly done on a number basis. Like Apple puts in an order for, let's assume, 500 million devices. They provide them with that number of devices.
Other questions?
A question on Microsoft. A lot of software companies, or some of them, are no longer selling a product that you can buy, but you have to rent from them. I think Adobe is one of them, where from the new products, you have to rent for a year or something. Is Microsoft going in that direction at all?
They're not renting out their offices or, MS Office or Windows right now. It's not something they're looking into.
I think you're talking about software as a service, correct?
Software service.
I think Microsoft's doing some of that.
The enterprise.
That's cloud. They are into cloud. I hope he's talking about cloud. In cloud computing, they just started to do some sales, but it isn't their core area of service. They do not
With the
have
exchange and enterprise. If you go to the part of the breakdown of Microsoft's business, go right there, babe. Server and tools,
Yeah,
business
Windows
division.
Live is, I believe, SaaS, software as a service.
service and tools. That's mostly Microsoft Server and .NET related sales and all that.
Right.
It's mostly Office related hardware and all that. So they do support for that. They sell out a product and support it for like 2, 3 or however long the customer wants it.
And then business division, what is that?
Business division, this is where Office comes in.
So that's Office.
All right, thank you.
Thank you.
All right. The only thing between us and pizza is Oracle.
Can you turn it off then?
Thank you.
Okay, good morning everybody. My name is Pacharo, and today I'm going to talk to you about why we should buy Iridium Communications and sell Oracle. Now, I don't know how much background you have about Iridium Communications, but basically it's a satellite company that provides mobile and voice communication services. They also provide handsets and devices. They provide air traffic management systems, and they also do machine-to-machine services where machines in remote areas communicate to a central monitoring system. It's a fairly new company. It was founded in 2000. It had some management problems. It went into some form of reorganization, so which we merged in 2007. The return on equity has been increasing steadily since then. And that's been primarily driven by improvements in net profit margin and also slightly increasing their leverage. Their asset turnover has declined slightly. They've been doing a very good job in attracting new customers. Their compound annual growth rate is about 90% when you look at the subscriber numbers. And the average revenue per user is about $135 per month per user for government customers, and $47 a month for commercial customers. I had a look at one of their competitors, Global their average revenue per month is $47 a month per subscriber, and I think from the presentation earlier, you can compare that to Verizon's figure of $55 per month per user. In terms of valuation, they are trading at a discount to book value, approximately 50%, so we have a margin of safety there. The price earnings ratio is currently about 6, and they're actually in the middle of upgrading their satellite communication service, and that project is supposed to complete in 2015. One of the key selling points for Iridium is that they're the only such company in the market that can provide their services over 100% of the Earth's area. The only problem is that in some territories such as India, there's some local regulations that prevent them from operating there without a local partner, and since they don't want to do that, they're not operating in certain markets. The 5-year price target is about $17, so the upside is approximately 200%. One of my concerns with this company is that most of their revenues are from North America, approximately 60%, 29% from the rest of the world, 11% is from the UK. So if there's any downturn in revenues or the economic outlook in North America, they'll be in big trouble. And in terms of the revenue breakdown itself, 71% of the revenues comes from services and 25% from the sales of subscriber equipment, and 4% from engineering support services. In terms of my evaluation of the firm, in terms of the business, I think it's an A+ business. I believe that as long as companies need to go exploring and operating in areas where you don't have reliable communication services, you will need to use satellite. I believe there's a lot of potential for their air traffic control management system. And as if the economic conditions improve across the world, cruise ships and the like will still need to use their navigation system and communication systems. The management team is pretty good. They've got about 30 years experience in the telecoms industry. And one of my other concerns with them is their high debt to equity ratio. It's about 118%, which you can compare to Oracle's figure, which is about 82%. They have some restrictive covenants. Most of their financing is from bank loans, and most of it is fixed rates. The rate is a bit higher, it's about 5%. But I believe that these covenants, on the one hand, whilst they're restrictive and they can't do much activity like mergers and acquisitions or pay dividends at the moment, it does instill some financial discipline in the firm. I think I've mentioned the key customers in the US and foreign governments, Department of Defense. We just signed a new 5-year agreement with the Department of Defense, so that should keep them going for the next few years. In terms of their approach to market, they sell primarily through 70 service providers and some value-added resellers. And their satellite network, I think I mentioned, was 66 satellites at the moment. I did a 5-quarters analysis of the firm. Rivalry is moderate. They've got about 3 or 4 large competitors, 2 of whom have recently announced that they're forming a strategic alliance with a view to reducing their costs, so that is a potential threat. Supplier power is high. They rely a lot on Boeing and Tails Engineering. Tails, I think, is a French firm. Customer power is believed to be relatively low, and the threat of substitutes is low. That Iridium, next up, the project that they're really relying on, if there are any delays or issues with that would be a problem for them. And I think I've talked about that items here. Right, turning to Oracle. Oracle was a difficult proposition to sell. It's done very well in the portfolio to date, but my concern is in the future growth rates. I think we've estimated over the next 5 years, the share price should increase by 15%, whereas with Iridium, we're looking at a potential upside of 204%. Management have recently been criticized for being overpaid. There's been some non-binding shareholder votes which are criticizing them for that. And also there's been some accusations of management inattention to the business. Larry Ellison has missed a few keynote presentations and earnings calls this year. I think that was around about the time of America's Cup. They did a great job to win, but the investors are not too happy about that. actually this I think there's an area. The stock is actually not down. It's actually done pretty well since we acquired it, and but my concern is going forward. What is going to happen? Yep, basically that's it, and I'm happy to take any questions about why we are going to buy Iridium. Do you have a question?
Going back to Iridium, you said that their debt covenants, although they may seem restrictive, they'll instill financial discipline. Do you think that they'll still be able to operate and grow under these really restrictive debt covenants?
Well, I believe they will be able to grow. Right now, they're going to conserve their resources, pay down debt, invest in the business, but not necessarily pay out a dividend to shareholders. So that's the aspect. I'm trying to look at the positive aspect of those covenants.
And what's the negative aspect?
The negative? Well, right now they don't have much scope to respond. These two competitors announced their alliance recently, a couple of weeks ago. So even if they did have cash on hand and they want to acquire another company, they can't do that right now. So from that point of view, it's bad. But if the business goes down today, 50% of book value, so we'll still make some money. Yes?
What's the main reason for that huge amount of debt? Is it a very large capital expenditure that they
yes.
investment they'll see a big return on?
Yes, that's exactly it. This Iridium Next project is costing them a lot of money, and it's not peculiar to Iridium. All of these satellite communication companies, I think their replacement cycle is every 10 to 15 years, where they have to embark on major capital expenditures. So that's why they've had to borrow this money, and that's why they can't pay a dividend today. Yes, sir.
What kind of competition does Iridium have right now?
There are about 4 or 5 big competitors, and I believe their market share is about, Iridium's market share should be about 30%. So there aren't that many competitors. It's not that an easy business to get into. There's regulatory barriers, there's high capital requirements to get into this business, and also, so it's not that easy to get into. Sorry, you had a question, sir?
Yeah. So, two questions. So I'm looking at 600,000 subscribers, and I'm wondering, first of all, capacity-wise, are they using all the 600,000 subscribers using all the capacity? Second thing is, if they're not, how do they get that service more to people? Like I assume using satellite would be perhaps in the third world. I mean, in the third world countries, I assume. How do you distribute the service to those people? How do you market? How do you sell the service?
Well, in terms of the capacity problem, I don't think it's an issue. I think that they've got capacity to offer service to well more than the 600,000 subscribers. Reading the latest annual report, they still want to acquire as many new customers as possible. In terms of the approach to market, they primarily go through they have partners who actually approach customers directly in these markets. And if I think of the region of the world where I'm from, in Southern Africa, there's lots of potential for these services to be offered. Remote areas in South Africa, all the big mining firms. I'm thinking if I move to Brazil, think about those offshore fields in the Petrobras is running. So I think there's still a lot of scope for them. And since the Department of Defense is one of their key customers, and the world is not going to get safer anytime soon, they're still going to need somebody to manage their communication services for them. Yes?
So it's priced at 50% of book value?
Yes.
Do you think there's a reason for it being so cheap?
I think the market reacted badly to, they haven't quite regained confidence in the firm since it went through that whole bankruptcy and reorganization. The fact that it's not paying dividends, most people would want a dividend paying stock. So I think that has depressed the stock price. But I think that situation is not normal. There's no reason why it should trade at below book value forever.
And when was the reorganization?
I think that was the mid-2000s. There's some private equity firm, is it private equity, which took over them, I think, in 2006.
Yeah, do you know who the largest shareholders are currently?
Currently, I'm not sure. I think the company that helped reorganize them is still on a good chunk of their stock. I think the company is called Greenfield. I'm not sure.
That's one of them, yes.
What about the largest shareholder? They own 20% or so, 16, 20%?
I'm not sure about that. Is that somebody other than Greenfield?
Yes.
Yes.
Okay, no, I'm not sure about that. Sorry. Yes.
It seems like a lot of your growth opportunities are internationally. Can you speak to like how much experience they have in that? Like, do they have like some good international management experience? Do you think they'll do well internationally?
I think they will do well internationally because that's where you really need their service. If you operate in the continental US, except I guess for if it you need something more secure than your traditional mobile communication, I think there's good potential for them to grow. I'm not sure exactly which countries they have the coverage in say Africa, but a country like the Democratic Republic of Congo is very attractive. There's lots of mineral resources there, but it's huge. How do you make sure that you can communicate to your minds out there? For investors, I think in order to ensure that they can communicate, you can still update your system, they know what's happening. I think there's potential for them.
But I think he's getting to the management. The opportunity is there. Will the management be able to capitalize on it relative to their peers, competitors?
I think they do have the capacity to capitalize on it. They've got good experience in telecoms. At least two of them have approximately 30 years experience each. So I don't think they'll have an issue in terms of management capacity. Yes?
If the past 5 years growth is only 6 point, it is revenue growth 6.1%. But if you look at the even revenue growth is only 10%, like that's 2011, and 2012 it is 0. I think that the revenue growth estimates or the earning growth estimates are like 15% is high.
It may be a tad high, but even if it's slightly less than that, I think with this new project that they're working on, they're going to offer more services which will boost their net income. So I think the upside potential definitely is there. Maybe this is too optimistic, but I believe that there's definitely upside potential for this stock. Yes.
Can you explain why the free cash flow has been basically it was negative 86 mil, and then it went up to negative 268, and then I guess they're trying to build the infrastructure. And I mean, is that a way? Is that still going to go up in future, or?
My understanding from reading the earnings transcripts and the like, they're anticipating that they're going to get that situation under control in the next few years and that it will turn into a positive situation, but of course that remains to be seen.
So we're selling a business that's fairly stable, and it's paying a dividend. The valuation is admittedly higher, but we're buying a business admittedly cheaper, but certainly with a lot more uncertainties around it. What's the core of the thesis? Or, what gives you confidence about the trade?
Well, because they recently re-signed one of their major customers, I think that's a good sign. That will help them attract new business. I think that once their next project is up and running, that will allow them to offer more value-added services, improve their margins. Oracle, yes, it's good, but I think that it's about running its course in the portfolio, and it's probably time to refresh it. I mean, it is a tough sell. It is a very tough sell. Because I know in the past when I've recommended to clients what database systems they use, it's always Oracle. But for now, looking at what's going to happen going forward, I think it's not a bad decision to sell.
Any questions?
Ron, my question didn't have to do with his presentation.
Okay.
Is that okay?
All right, thank you.
Thank you.
Okay, we're at our lunch break, so the pizza should be here momentarily. What was your question?
Oh, I just had if you and Steve knew, or if you,
Well, it's a bit of a mix, yeah. Random plus some sense to try to keep the groups sectors together. Yeah. But being distributed. Did you have a?
well, I couldn't help it. See, I do my
Yeah, they went first. Laura was first. Well, we didn't do it by gender.
Yeah, that's what I was wondering.
We did it by sector, yeah.
It's more than anything, you, Laura. And I think your presentation was
Well, it was not, had nothing to do with that. It was sector based.
you know, just to add. I mean, it was like one of the times that I was at prior to CW, many times. Like, oh, I need to volunteer.
Yeah.
And then you don't volunteer, then you step out behind the desk, volunteer to you.
Right.
You know?
Well, thank you for coming. You'll come again.
You know, the biggest challenge for me was to find out, like, it's a puzzle, I know puzzles. But I also find that putting puzzles together is very exhausting.
Yeah.
And for us, right, the invitations, like I made several phone calls to my office last week to like,
Okay, well, get us your, make sure we have your email then. And then we'll make sure that you're updated accordingly.
that'd be great.
Right here. Write your email right there.
Okay, I've been to the ones in September, you
Okay.
know, where they talk about the results,
Yep.
which is, if this is everything is valuable.
So maybe send here? Yeah. I'm just making sure there's nothing else to fill out. This is the undergrad class.
Undergraduate? No, this is a graduate.
No. 4101 is the undergrad.
Oh, 4101? Okay, I can change them.
Yeah. So you need the grad class.
It's here early.
Perfect.
Thank you so much.
Thank you.
I'm leery about taking Marcia's hands.
No worries.
Because of course, it was only that if we're taking a trip, that I would
Yeah. Well, I really appreciate you attending.
Oh, it's been wonderful.
Sure, it's 4101. No, I'm teaching now. That's the I teach undergrad and grad. Okay. No, you want to, but aren't you a graduate student? Yeah, I'm a graduate student. Yeah, so you want to be a graduate which because here has seven
Oh, yeah.
Don't eat it. You eat out there. This is the class. Oh. Okay. Okay. That's the my next. Because